Hi, this is Charlie giving you Friday's video. This video may be a little bit longer today because it's quite technical in some of the stuff I'm going to go through. And the question is, should you spread bet, should you CFD, or should you just trade Forex if you're a Forex trader? And so we're going to go through a number of factors here in relation to each of those. And for people who are here, if you're not based in the UK, then bear with me because we're going to go through CFDs versus Forex accounts as well. Because the biggest question we are ever asked when people join us or we ever put something on like a free webinar or something like that, the biggest question is, which broker should I use? And it's not easy to answer that question because people are based in different jurisdictions all around the world, and that can have an impact on that. And also their personal tax situations can also have an impact as well, and their trading style as well, whether they're intraday traders or swing traders or whatever. So we're going to go through a couple of bits here, but we'll start off with spread bettors. And so I always find it fascinating when you've got a spread bettor who wants to put £5,000 in a trading account because it's tax free, and yet they forget that they get £11,800 if you're in the UK capital gains tax allowance. So as long as you're not utilising your capital gains tax allowance, it doesn't matter if you're spread betting or not, or even if you're using an FX account, you're still not going to be paying tax on it unless your gains on your £5,000 account go beyond 11,800. So that would be you'd be needing to make well over 200% in a year in order to do that. And most traders don't make over 200% in a year. So what I would suggest, and so what's the difference? Well, we'll come to the differences in a bit, but certainly with spread betting, spread bet brokers, they serve a good purpose, of course. But you're not trading the real market in the same way as you are if you're trading with an FX broker. And so you're trading in effectively a synthetic market, and their spreads, although they'll market tight spreads, at times, like some of you may have experienced at times overnight, and this happens with CFD brokers as well, by the way, overnight when the liquidity dries up a bit, all of a sudden their spreads widen out to huge amounts, then you can get stopped out because you could have a stop loss down here. The actual market may have come down to about as low as that, and then you're like, well, how come did I got stopped out? And they're like, oh well, the spreads, they increased to like 10 pips overnight because there was low liquidity at that time, and so therefore you still managed to get stopped out. That type of thing goes on, whether it's with a spread bet broker or with a CFD broker at times, and depends on the market that you're trading, of course, as well. So these are the sorts of things that can happen to a spread bettor, and it's the same across news as well. The market comes down, it doesn't quite get to your actual stop, but your spread bet broker, they may widen their spread a little bit, and that might be enough to just get you stopped out. When again, if you were with a proper Forex broker, then you wouldn't be. And so these are some of the benefits of why to use a proper broker. It's the small things. Now, bear in mind, 90% of the time, these things won't happen to you, even if you're with a CFD broker or a spread bet broker, because it's only those occasions when it gets close-ish to your stop that could then happen if they've widened their spreads. But those 10% do add up. They really do. And so, and it's also slippage. How often do you get slipped on your stop as well? Now, slippage is a natural phenomenon that happens in the market, but it's still something which is there. Slippage. So you've got a stop loss level here at 00, let's say, and you get stopped actually at 97, so to speak. So again, your broker might just be now it could be genuine slippage, but you don't know with a CFD broker or a spread bet broker whether that's genuine slippage or whether they've just taken an extra couple of pips off of you. So all these little costs, they do add up when you go over the course of the year, whether you're a day trader or a swing trader. So the first point to make is for people in the UK, if you're trading with an account size which is, I would say, less than £20,000. Because let's go for another example. So let's turn the pen off. Let's do that. I will find I'll welcome any recommendations on a pen drawing tool, on a pen tool. So someone mentioned this from last week, from earlier this week. So let's say you've got £20,000 in your trading account. Okay. Again, you're not utilising your capital gains tax allowance, maybe, so you know that you've got 11,800 tax-free gains, so you don't pay any tax until you've made more than 11,800. So again, you've got to have made over 50% in a year, greater than 50% in a year, before you're actually paying tax. Okay, a lot of traders, might average around about 50% a year. So again, is it really worth it? But the benefits are that you're getting better execution by using a proper account over and above something like a spread bet or a traditional sort of CFD broker. So I'm going to give you a comparison table in a moment. So we'll give you a comparison table as well. So okay, but you might say, yes, Charlie, but I make 80% in a year. Okay, if you've been making 80% in a year, that's fair enough. So 80%. So on the gain, so that would be a gain of, what's that work out at? £16,000. So the difference between 11,800 and your £16,000, there you go. So you pay the tax on about 4,000. So you'll pay 20% tax on 4,000. Okay, however, lots of people might be married. You might be married, okay. You could actually, you've got 20,000. You could say, well, I'll put £10,000 into my own account, and I'll have £10,000 in my partner's account as well. And then you make 80% on that combined amount. You're still not going to be paying any tax. So you really need to think about this. If you're trading along with a couple of £1,000s in a trading account, or 5,000 or 10,000, and you're in the UK, that tax argument really doesn't come into being until you're way up in, probably 40, 50,000 pounds plus. Then the tax argument then starts to come in. But even having said that, there's the execution argument. So if you're going through the year where you're having this extra slippage on trades, those extra few pips, if you're trading at £10 a pip, and you get slipped an extra couple of pips, well, that's just cost you, £20. And how often does that happen? And also those trades where the spread gets widened and you get stopped out, and then it goes on to become a winner. They add up over the course of the year. So there is this trade-off with trading with a spread bet account and the attraction of that versus trading with a more professional account. So the reason, again, I'm doing this video is because we get asked this a lot. And I get asked it all the time when we do 2-3 days in our live trading room, which we do periodically, once about every 6 weeks or so. It's the hottest question that we get asked. Which broker do you recommend? So I usually say, well, I don't particularly recommend any. We do recommend, traditionally, I've recommended Saxo Bank, who I think are good. The only thing with Saxo is that if you've got a smaller account, then their charges they're not the cheapest. So what Kim's done is he's come up with a comparison. So let's go through this. So he's come up with, and he's spoken to a company called LMAX. Many of you would have heard of LMAX. And he's done a comparison with LMAX versus two leading spread bet firms. I'm not allowed to mention their names, but we've got a spread bet firm who's very well known. And then we've got, I'll leave it to you to figure this one out, probably the largest spread bet firm, CFD firm in the UK. So you can pretty much guess who that is. Plus a typical FX broker as well. So this is just a spreads comparison here. So yeah, okay, so LMAX, they've got very tight spread, as you can see. Now, as Kim's put on this screen here, that they do charge $2.70 per 100,000, so that's per one lot. So if you're trading at 0.01 of a lot, then it's whatever that comes down to. So I must admit, those are pretty low, those charges. Anyway, so plus they also have a low spread as well. So again, these situations where you might say, well, the spread bet's only at zero point 0.8 and I don't have to pay a commission. Well, we've already said, look, that equates to about 0.27 pips. So that would still be the equivalent of 0.57. Yeah. If I add that to it, that would, if you thought about it in those terms, it would mean a spread of 0.57. So people don't always understand why have a lower spread and then pay a commission. They prefer to just have it all wrapped up in the spread. Well, that all comes back down to, yet it comes back to my example, these situations where you can, if you've got the lower the spread that you've got in your account, and if price comes down and gets close to your stop loss, a broker that has maybe the commission included in the spread, so therefore a slightly larger spread, there are those occasions where, oops, you just got stopped out, but the person who has the 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 tighter spread and pays a separate commission doesn't actually get stopped out. And that's happened to me loads of times over the years with our members in our trading rooms. It happens more often than you'd think. But so anyway, so that's the reason for that. So let's go back to Kim's slide here. So yeah, so we can see, and the other thing is that Kim mentioned to me on the phone the other day when he talked to me about this. He said that it's the cross pairs as well. So a lot of brokers give decent spreads on the headline, euro dollar type currency pair and pound dollar even, but it's when you go to the cross pairs that you actually start to see again where a broker like LMAX, who are basically a liquidity provider, basically. You're getting such better, tighter spreads. For intraday traders, that's more important. For swing traders, it's less important, but it still is useful to have, a lesser spread. Bottom line it is. So, and Kim's also highlighted this last look as well. LMAX don't have a last look. Last look is just, well, you can probably already read this now. It basically gives the broker the opportunity to time out the trade or to re-quote you and that sort of stuff. So and just take that little bit longer to fill the trade, execute the trade, whereas LMAX don't do that. So some good comparisons there that Kim's put together there, and the reason he's done that is because we've got a comparison site which we are about to go live with in the next week or so. Because again, we get asked about brokers so often, so we're getting a comparison site together, and LMAX are going to be one of the brokers that we have on that site. Now, if you're interested in that and you think, blimey, this is interesting stuff, what you're saying there, Charlie, yeah, you're absolutely right. I don't need a spread bet account. Or you might be in America. If you're US, LMAX will take American accounts, or anywhere else in the world, pretty much, apart from certain jurisdictions. So you think, okay, this looks good. Super tight spreads, low commissions, no last look, that type of thing. I've got another sheet here. I don't know. Oh yeah, okay. So Kim's been speaking to his man over there at LMAX, and you will get, you can have obviously professional accounts, but the LMAX traditionally only take a minimum of £10,000. Now Kim's telling me here that if you go through Easy Trader, then they'll open up an account for you with only £2,000 in the account. Otherwise, it's a minimum of 10,000. So they are an exchange broker. So like I've said, they are, like Kim's put here, they're similar to an equity exchange. So they are big liquidity providers, I've already said. So they do have some benefits there, certainly. And it just seems that, they're super low. Basically, the bottom line is they're super low commissions, because they just want volumes. That's it. And so if you're interested in LMAX, go to our website, scroll down, and you'll find it on our homepage. If I actually bring up, I just found it. So if you scroll down, come to our homepage, easytrader.com, and if you scroll down, then you can find it somewhere. There it is. Under recommended brokers, we've got LMAX there, and we've got Saxo Bank there as well. And Kim's been trading with them. He's raving about them, and if you want an account, there you go. Very, very good. what else is there to say? I think that's it. I think the main thing that I wanted to say here today was just to give people some food for thought on why they're using certain brokers. And certainly for the UK, you think a lot of people in the UK are trading with account sizes which spread betting, does it really matter? And now we're getting these professional brokers such as LMAX who are offering such great deals for even for people with small accounts. Then it does seem to me like a bit of a no-brainer. So if you want to do that, if you do it, the benefit is if you do it through Easy Trader, you can. That means that if you've got less than 10,000, you can still open an account, down to a minimum of 2,000. And you do get looked after. Kim's even put the guy's email address on our website, so you are treated as a member of Easy Trader, and so you get properly looked after. So that's the benefit to you. Do we get paid a commission? I will fully disclose. Yes, we do. We get paid, but it is tiny. It's minuscule. The bottom line is LMAX had contacted Kim. Kim quite liked them, and so therefore we're giving them a bit of a shout out here today. But the point is of my video overall is do think about the broker that you're with, whether you think you're getting the best execution. Oh, the other thing with LMAX is their charts. They use IT finance charts. I know a lot of people trade with someone like IG in the UK, IG Index. LMAX can offer you those charts as well. So it's another benefit there. I know a lot of people like those charts that IG provide. They have them as well. I think that's it. Blimey, I feel like I've been doing a sales pitch today, but it's not. In that, it's about getting people to think about where your broker is. Is your broker based in some weird jurisdiction, or is it under a safe FCA London-based broker with the top protections that you get? Likewise, you do with some other brokers in other jurisdictions around the world as well. But there are some flaky brokers out there as well, and it gives you some food for thought about where your money is parked and the sort of spreads and the execution that you're currently getting. Even if you're with a very large, spread bet or CFD provider, don't think that they're not having their fair pound of flesh out of you. Trade on an exchange where you're literally in there with all the biggest players out there as well and paying the same sort of charges. Food for thought there for Friday. Sorry, no live trading today because I had to do this video. I will endeavour to do one. I was going to say next week, but I'm away next Friday, so I will get back into the habit of doing a periodic live trading video for you as well. Take care for now. Enjoy your weekends.